You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof of your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender.
Welcome back.
Welcome back. Todd Halterman is in the house.
Love being here, Ron Siegel.
Welcome, man. And I like the idea. At least there's somebody else as old as me on the radio broadcast. Well, not quite as old as me, but at least he remembers that radio program. So, hey, let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. Celebrating today, World Hypertension Day. I understand you get that from your kids. I don't know, but that just could be the issue. Graduation Tassel Day. Sometimes you feel like a nut. Sometimes, okay, Todd, I know you remember that one. Sometimes you feel like a nut, sometimes you don't.
Almond Joy has nuts.
Josh, do you know that one? Okay, Josh is in the background saying no, he doesn't know that one. So that was an old commercial. Mounds and Almond Joy. Sometimes you feel like a nut, sometimes you don't. National Walnut Day is today, the 17th. Medical services, emergency medical services for children. I don't know. Those things all make me a little nervous. I start talking about the kids. It just okay. Move right along. Todd, this is just for you. You must have figured this when you booked the date. Today's National Idaho Day.
No way.
Absolutely. National Idaho Day. So are you in Idaho today? Or are you Washington? Where are you at?
I'm in Washington today.
Okay. See, so National Idaho Day, you had to leave. Okay. And for those of us that have beaten anorexia, National Cherry Cobbler Day. Where are you getting good cherry cobbler? I know. I'm a honk. Polly's Pies. Where else would I be going to get cherry cobbler? Let's move right along and see what's going on in the world today. The president woke up. So the stock market is up today. Dow Jones Industrial Average is up 198 points. S&P is up 22.5. NASDAQ up 65. Oil prices are up at $1.49 a barrel. And the 10-year Treasury is up just a couple basis points. Why would I say because the president woke up? Well, somebody had to wake him up. He was maybe he was in a vote in the Senate like Dianne Feinstein is. Did you hear that one? So Dianne Feinstein, although she's been out of the Senate almost all year because of shingles, said she's been there every day for every vote.
It is what it is.
Kind of like the president. So he decided that he was going to get up today and held a press conference right around, 10:30. That's a little early for the president, especially on a Wednesday because he's probably getting ready for vacation right now. But here's the issue. He said they're going to actually hold talks on the debt ceiling continuously until they solve the problem.
Nothing like a little air superiority.
He's only had how many years to figure this out? You know, when Janet Yellen came out and said that they were going to run out of money June 1st unless they raised the debt ceiling. Well, the president didn't believe too much about it, didn't think it was going to really happen. So he's been sleeping most of the time. And the reason I kind of pick on him a little bit is there is something called the presidential, official presidential calendar. And you can actually look and see what's on the official calendar on a day-to-day basis. Now, I'll save you the time because generally there's nothing on the president's calendar every day. So whether he's in Delaware or Washington, it's pretty much about the same. So we're just watching these things to see what happens, if they can come up with some solution. Now, you know, I've been giving you these predictions on Ron Siegel Radio, and you know, I just go based on, you know, my experience, knowledge and experience here. Do you know when this debt crisis is going to be solved? This debt ceiling. So I'm going to look at it. I'm going to pull it up on my calendar right now. We can mark it down. It will be solved on June, right around 11 p.m. Eastern time on May 31st. Right around 11 p.m. Eastern time, May 31st. They're going to go right to the wire. And what's going to end up happening there is they're going to go right to the very last minute, and then they're going to come out and they say, we came up with a deal, but we need to extend the debt, running out of money, the debt ceiling for a couple of weeks so we can get it all drafted and signed. Just going to be the way it's going to go. I'm just going to predict that's the way we're going to see these things happening. So just throw that out there for you. We'll see where all this goes, but I'm just saying, kind of history repeats itself sometimes, and in Washington D.C. they don't do anything in advance. They wait until the very last minute on everything. Speaking of last minute, if you haven't filled your, did you see Gas Buddy came out with the best day to fill your gas tank is on Monday? That was a report I just saw. Why? Well, because the gas prices, the deliveries, and they're running out of inventory, so the service stations will raise their prices throughout the weekend. Monday they start getting reloaded again, so the prices come back down again. California gas prices, $4.79.5 a gallon. Yeah, that's welcome to California. Of course, Todd, you're over there in you don't fill up in Washington, do you?
I try not to. It's the same thing.
Yeah, I'm looking at Washington. $4.59 in Washington. And now you're lucky because, you know, you just go across the border to Idaho and you can save $1 a gallon.
It's crazy.
$3.74 in Idaho. Now, I don't know. Maybe they have the refineries in Idaho. I don't know because even Hawaii is cheaper than California. So, but then we got Josh. He's over there, $4.21 in Nevada. Running around the horn, our processor, Jody, $4.66. Brittany's at $3.34 in Colorado. That must be America. And our tremendous underwriter. Even you guys in Idaho, Todd, can go to Louisiana and get gas at $3.07. $3.07 a gallon over there in Idaho. Think about that one. Moving right along. Let's see what else is going on in the world today. Bus loads of folks going from Texas to the vice president's house. I wonder if she's going to do a tour.
Wow.
I think they're going to send him to her house. And I'm not sure. Maybe they'll start sending bus loads to Delaware to arrive on the weekend. The president's almost always there at that time. So he can see right now, if you saw the clip of his press conference this morning when he was talking about the idea of them getting a debt deal done, easy for me to say, he made a comment that the border is secure. Well, here's the issue. You know why Title 42 didn't have much of an effect on the ending of Title 42? Because they weren't enforcing it the last 2 years. So it's just a whole big issue. Pfizer, running out of money, borrows $31 billion in a mega bond deal as debt issuance picks up ahead of the debt ceiling deadline. I guess being that they're not getting another $4 billion for COVID, I guess they figured they might as well go out and borrow some money. $31 billion. Speaking of COVID, did you see the latest results on COVID? I love this stuff. So everybody had to get these shots. Everybody had to get the boosters to 2 weeks to calm the cure or whatever they called that malarkey. Well, guess what? COVID is gone, and only 19% of the population got the boosters. 19%. Think about that one. Just throw that out there. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, yes, there is a recession on the way. We told you about that. But Todd Halterman is going to tell us about recession protection. Easy for me to say. What you need to know about home price news and navigating the maze of credit repair, why professional help can be a game changer, all that and more. Reach me anytime off air, number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at RonIsMyLender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037. RonIsMyLender.com.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
You're listening to Ron Siegel's Home and Finance Show with local...
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs, the products. You just make the call, 800-306-1990, $19.90. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated across 42% of all mortgage transactions nationwide. Let's see what the loans locked at yesterday. Looks like every one of them were up. 30-year conforming, 6.536. 30-year jumbo, 6.638. 30-year FHA, 6.468. 30-year USDA, generally that's our rural areas, generally no down payment, 6.477. And the best loan on the market, the 30-year VA loan, you got to earn that one. You don't just get it. 6.23 is the interest rate on that 30-year VA loan. We love our veterans, so we certainly appreciate the idea of having those. And yes, we are coming out with our newest setup for the veterans. We've got a series put together on VA home loans. So we're going to be sending that out and getting that set up. So if you want to get access to it, you just have to RJ at ronsiegelradio.com, RJ at ronsiegelradio.com. 10-year treasury right now is up 3 basis points. S&P 500 is up 22.6. And the mortgage-backed securities are down 6 basis points. That means interest rates are up ever so slightly. Why is that? Well, we've got all the news for you. The housing starts for April were reported at 1.401 million annualized pace, which is up 30,000 from last month. Revised report of 1.371 million. Housing permits, which are a good indicator of future starts, decreased by 1.416 million units, down 231,000 from last month's figure of 1.437 million. And just remember, we're still short a lot then. And I've told you this over and over again. If you are still listening to Diana Olick, she will get housing right eventually, but it'll also be the first time she ever says anything accurate about it. Still giving bad information out there. We still need about 1.9 million new units every year. We're creating 1.416 million units. So we don't have enough supply. We also run out or obsolete about 100,000 every year. And we're not completing them because of interest rates. Completions fell by over 10% last month. Single family were down 6.5%. So it's not an issue that people don't want to buy houses. It's not a demand problem that housing is down. It's a supply problem. There's just not enough inventory. National Association of Home Builders Housing Market Index measures builder confidence, rose 5 points in May and is finally getting back to break even. So it rose 5 points to get to break even. Think about that one. Confidence has risen for 5 straight months. It is the highest level it's been since July 2022. The estimate was for no change, so this was much stronger than expected. Looking at the internals, the present situation was up 5 points to 56. Future outlook was higher by 7 points to 57. Buyer traffic rose 2 points to 33. Buyers, maybe they're not out there. You know why the buyers aren't out there? It's because they are not getting educated. Here's the issue I'm hearing all the time with respect to buyers in the market. Here's the issue. It's pretty simple. So the buyers, the sellers say, I don't want to sell my house. I've got a 3% mortgage, 3.5% mortgage, 4% mortgage. They don't want to sell, but they don't look at their household. Now, if you were to think about this, and if you were to send us a schedule of your debts, I want to know credit card amount, interest rate, payment, and balance. That's all. I don't care where it is, what credit card, stores, autos, student loans, and your mortgage. All of those things. You're going to find out that if you've got a normal household mix, you're probably going to be somewhere in the 6.5% to 7% range when we blend your debt. Now, if I said to you, you can buy a new house in the 6.5% or 7% range, you can say, I don't want to do that because I've got a 3 or 4% mortgage. But what if you sell your house, pay off all your debts, buy the new house? Your interest rate is going to be right about the same as what your blended household interest rate is. Nobody's telling you that. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products you have a phone? Call 800-306-1990, 800-306-1990. Our good friend Todd Halterman checks in from Washington. He is a financial advisor, but not giving financial advice today. He's educating us. If you want financial advice, it's very, very simple. Give me a call at 800-306-1990. I will get you on Todd's calendar because I got the link to send to you, and you can go right on there and get a brief consultation, see if it makes sense for you to follow his guidance that's unique to you. When we do it on radio, it's not unique to you. And there's something that financial advisors, there's a law that's in place that financial advisors all have to follow. It's called Know Your Client, right? So they have to know. Now, on radio, do you think we know you? No. We just want to give you some education. And there might be some, and generally it's good questions for you to ask either your financial advisor or give a call to Todd Halterman. Morning, Todd.
Good morning.
Did I hit that about right? Get the disclosures out there?
Oh, yeah, the know your customer rules and no specific advice given over general public medium. So today's about education, information, and empowerment.
There you go. So I've been saying right along we're heading toward a recession. What are your thoughts?
I submit we've been kind of facing it and bouncing in and out of it for the last 4 quarters, but you have to have 2 quarters in a row with a down GDP. And
didn't we have that last year?
It looked like to me we did, but we kind of skirted around it. And I think that goes back to the manipulative policies of our government to get the results that they want. It's making it difficult for consumers to see clearly about how to guide themselves, which frankly is why I'm on this show and why you do what you do.
Yeah, and it's a shame that we have to report those issues. I mean, I had told everybody May 10th we'd start seeing CPI come down. And then the weekend prior, the CPI numbers for a year ago were revised downward. So you're spot on. How do you make business decisions? How do you make an intelligent personal decision when you're faced with these changes that don't seem to make a whole lot of sense to the average person?
They don't. It's a lot like trying to teach my daughter to drive through roundabouts.
I don't know if we even want to. Do we really want to go to that one, right? I mean, that's yeah.
You're looking for a break somewhere, and you're not finding it.
So if we think there's a recession coming, and all of the indicators, I guess being that now we've got this new sense of government. It feels like a recession. It looks like a recession. It smells like a recession, but we can't call it a recession. But what are we supposed to do with our portfolio, being that all these things are taking place?
Well, sometimes when it's the forecast calls for rain and the newscasters say it's about a 60 to 70% chance, smart people will tend to grab a risk management tool called an umbrella just in case. So sometimes umbrellas are not very heavy to carry. They can be a pain in the butt. So it does change the dynamic of your day, how you go about your day, but it's really good to have an umbrella when you need it. And if you don't need it, you're really not that upset that you had it.
Yeah, I like that analogy right there, because the whole concept becomes something you and I chat about all the time. It's the whole idea of planning, right? If you've got a good financial plan and you're executing it, you look at it and you might say, okay, I'm a car driver. I don't drive very fast. I know that you're out on the ocean, but you look at where you want to go. And I go 20 miles and I put in my GPS, where to go. Right. So I go down to the beach almost every weekend. And I put into on the way home, going down there, it's no big deal because there's no one on the road. It's too early. But coming home, I put into my GPS on my phone, my home address. I know how to get there because I've done it a million times. But I want to figure out, do I need to course correct to maximize my time?
Correct.
Kind of the same thing you talk about with a financial plan, right?
It is. It's the same thing as teaching my daughter to drive through a roundabout. People tend to look over the hood of the car to see the lines, to make sure they're staying within the medium, and they always overcorrect because they're not keeping perspective far enough out in the road to keep the wheels in between the yellow and white line and perhaps the curb. So we need to help people look a little further out with perspective to have a plan so that they mitigate risk and manage their risk, but you can't cover all the risk. Investors have to be willing to take some risk. But Ron, what if there was a way for an investor to keep their investments liquid in an ETF that gives them principal protection that costs no fee, that allows them that if the market is down 10% or 15% or less, and investors can protect their principal and get a positive return. So if you have an S&P 500 index ETF and you go down 10%, 100,000 goes to 90. Your neighbor is still at 90, but your investment with a buffered ETF trust allows you to get your principal back. And now you're at 100 when your neighbor's at 90, but there's one better option. It's called dual direction. And so when an investor loses that 10%, they get their principal back, their neighbor's at 90,000, they're at 100, and then the trust adds 10% to the account because it was down 10. That means they get a positive 10% interest. So the investors I like to work with want low fees or no fees. They want it liquid, and they want a chance to make money when the market's down. Now, it's very rare we can do a no-fee protection trust, but it exists today, and we call it a dual direction protection. So those of you out there that want protection from losing your assets in the next year with a recession, we can protect that principal, keep it liquid, and give you a return from minus 10% up to, in some cases, 18% on the upside. But those rates change daily. It's really just a matter of being able to protect you, have the umbrella with you if you need it. If you don't need it, it doesn't cost you anything, and we can go about our day and help people make money.
So when we come back, Todd, I want to ask you a little bit more about this, because about 63% of America has an investment, and by design, that one investment has a zero rate of return. Zero rate of return. And again, 63% of America has it, and the other 37%, most of them want it. And they want a zero rate of return. I want to talk to you about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. What you need to know about home price news, all that and more. Reach me anytime. Off air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at RonIsMyLender.com. That's RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, It could still be costing you thousands per year. The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. What you need to know about home price news. The National Association of Realtors, NAR, will release its latest existing home sales report. The information it contains on home prices may cause some confusion and could even generate some troubling headlines. This all stems from the fact that NAR will report the median sales price, while other home price indices report repeat sales prices. Vast majority of the repeat sales indices show prices are starting to appreciate again, but the median price reported on Thursday may tell a different story. Here's why using the median home price as a gauge of what's happening with home values isn't ideal right now, according to the Center for Real Estate Studies at Wichita State University. Quote, the median sale price measures the middle price of homes that sold, meaning that half the homes sold for a higher price and half sold for less. While this is a good measure of the typical sale price, it is not very useful for measuring home price appreciation because it is affected by the composition of homes that have sold. For example, if more lower-priced homes have sold recently, the median sale price would decline because the middle home is now a lower-priced home, even if the value of each individual home is rising. People buy homes based on their monthly mortgage payment, not the price of the house. When mortgage rates go up, they have to buy a less expensive home. To keep the monthly expense affordable, more less expensive homes are selling right now and that's causing the median price to decline. But that doesn't mean any single house lost value. Even NAR, an organization that reports on median prices, acknowledges there are limitations to what this type of data can show you. NAR explains, quote, changes in the composition of sales can distort median price data, unquote. For clarification, here's a simple explanation of median value. You have 3 coins in your pocket. Line them up in ascending value, lowest to highest. You have 1 nickel and 2 dimes. The median value of the coins in your pocket is 10 cents. If you have 2 nickels and 1 dime, the median value of the coins in your pocket is now 5 cents. In both cases, a nickel is still worth 5 cents and a dime is worth 10 cents. The value of each coin did not change. Same thing applies to real estate values. Bottom line, actual home values are going up in most markets. The median value reported tomorrow might tell a different story. For a more in-depth understanding of home movements, give me a call at 800-306-1990, 800-306-1990 at RonSiegelRadio.com. Continue our conversation. Todd Halterman is in the house. We are chatting about, just the markets and investments. And, Todd, you may remember this. I think we've talked about it. I used to do a seminar over at Chapman University talking about how to retire on $18,000 a month with no 401k, no IRA, and using mortgage planning. And, I don't know about this particular investment. I'm not a financial advisor, and I am not a tax person or not tax licensee. But here's the concept. So if you missed the last segment, Todd gave us some great insight there. Not giving you financial advice. But I'm not a financial advisor, but I'm going to tell you this. Home equity always has a 0 rate of return. Always. And right now, about 63% of the population owns a home. 63%. And I think we had like 54% have a debt against it, a lien against it, a mortgage against it of about 42%. So you got 58% equity that's earning you nothing. And I say, well, but it's safe and secure, Ron. No, it's very, very risky because if you need it, you cannot get it unless you sell it. Right? I don't ever lend money. I lead a lending team. I don't ever lend money to somebody that really needs it. I lend money to people that want it. Go to the bank. If you're in desperate need, they're not going to lend you any money either. So you have to sell that asset. Now, what if in the good times you took that equity out, and Todd won't tell you this, and FINRA hates if I say it, but I'm not licensed, so I can say it. Take some of that equity out. Leave some behind, but take some of that equity out and put it in this fund that Todd was talking about. And I don't know if that's the right solution for you. I'm just saying it's a concept. You put it in this fund that has protection on the downside and gets you a return on investment as opposed to zero. Todd, am I missing something?
Not really. And the reality is we don't advocate for people using home equity to speculate with that money. But if you are an investor who can afford to use your balance sheet for building your wealth, then we always advocate for protecting your wealth and protecting your principal, and trying to create a situation called arbitrage, which means automatic profit. You have a cost of money at one level and you make if your cost of money is 6% and you're making 10%, that means you're making a net positive return of 4%. But we are very careful about utilizing equity in people's homes without having some protection. So in this instance, protecting your principal and having the upside potential of the market, but if the market goes down 15% or less, your principal is protected. And in fact, it's returned and you can get a positive return equal to whatever the portfolio is down. And the catch is right now we have these trusts liquid and they're also no fee. And so the really only negative is if the market runs up 20%, an investor may find themselves making 14 to 18% because obviously with the downside protection, there's a cap on the upside. But the cap isn't 2 to 4%. We're talking about double-digit growth that most investors would be quite pleased with regardless.
Yeah, and you know, the thing that you talk about, Todd, and we need to really focus on is risk, right? And one of the things that bothers me, because you hit it on the head, that you're not, you know, financial advisors and the regulators get really upset when we talk about taking money out of your property, you know, because of they think it's risky. And if you're going to go buy a car or a boat or a vacation, don't do it. Leave your money there making nothing. It's probably better because you're not being very, very astute. But the flip side of that is, number one, real estate has dropped in value at various times, and I don't think it's going to now. I'll just throw that out there right from the very beginning. I don't think the real estate's values are going to drop. But I've had 4 people just recently, Todd, that I've consulted with where they're real estate rich, they're equity rich, but they don't have enough liquidity to be able to go and pay for home health, and they need it.
Yeah, that's very common today.
So they're coming to me saying, Ron, what can I do? And I'm saying, you know, I got some good news and I got some bad news. The good news is you've got a lot of home equity. The bad news is there's no way of accessing it unless you sell. And people don't really want to be selling. They wanted to age in place, to stay in their home.
Right.
You know, or you know, recessions, Todd, you may know these numbers better than me, but more often than not, in recessions, people actually lose their job.
Yeah, it's kind of strange right now seeing help wanted signs everywhere, and we're talking about recession. But that's a little bit of a conundrum for me right now.
Yeah, it is. But it goes back to our thesis, our long-term thesis, and that is that we're always looking to correct for planning.
Right.
And you know, I know we want to have that golden future, but part of looking in the windshield instead of the rearview mirror is the what if scenario, right? I mean, what if I lose my job? What if I, you know, break my ankle stepping off a curb? There's a lot of what ifs.
There is. I mean, I call it the avalanche. One little thing causes the beginning of a small avalanche that can turn into a big one if you don't have a plan for contingency. And strong investors have a plan for contingency, no different than a hunter going into the woods needing to know how to get out in case of emergency. So we try to plan ahead for the worst things that happen. And that way, when they do happen, if they happen, we're prepared for them. And for investors going through a recessive cycle or facing a concern of a recessive cycle, we like to build backstops so people can make money even when the markets are down.
Now, I'm hoping that you don't have that, or you didn't have people in that bundle of community banks about 2 months ago. You weren't listening to Jim Cramer, were you?
Booyah!
Yeah, and I should say that I did listen to him for many, many years, and he had a very, very successful, and there's nobody can predict everything. So
no, when you predict that much every day and you're 50% right, you do win.
Yeah. Yeah, so and especially when you look at some of those things. So it is kind of interesting, but the bottom line that I really want to get to, and the most important part is, think about this. And we're in Southern California. I'm just going to use Orange County. We've got $1,039,000 is our median home price. And if you apply that 58% equity, that's got, can you imagine having $580,000 and not investing it in something that's going to get you a fair return on your money?
Well, in the last 2 years, we've seen a tremendous amount of people that have decided to capitalize on that equity and move to places like Idaho and Washington with their extra equity and rebuild their lives to retool their income. And it's been quite a ride to watch people make those changes.
Is it still happening up there, Todd, with the change in interest rates?
Oh, yes. But a lot of your people coming from Seattle, New York, Orange County, Southern California, they're coming with cash because of the dynamics of the equity and the growth of real estate there. And it's changing the dynamic of how they can live and use their money for planning and of course, lower taxes. But that's a whole nother discussion.
Yeah, you could take a dart and throw it at a map of the United States and find lower taxes than California.
I'd be curious to see what the rates of population have grown from California to Nevada over the last 2 years.
Yeah, I know they're leaving California, but Josh is one of them. He did that. He was he actually left California and moved to America, but I shouldn't put it that way. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, more with Todd Halterman. Opportunities in real estate, opportunities in private equity. We'll talk about all of that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
You're listening to Ron Siegel's Home and Finance Show with local.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment brought to you by rsrmoney.com, rsrmoney.com. Hey, we got a lot of conversation yesterday about the creative financing. And if you are one, especially those that bought a house last year, have some sort of a hardship, divorce, lost your job, default, some of those things, we've got investors that are constantly looking for opportunities. And you don't have to go through that default. You don't have to go through that foreclosure. If you give us a call at 800-306-1990, there may be a solution for you. Borrow Smart, brought to you by rsrmoney.com, rsrmoney.com. Continue our conversation. Todd Halterman is in the house. We are chatting with him. Again, if you missed it, Todd's a financial advisor giving us education only. We are not giving specific financial advice. He's not. I never give specific financial advice because I don't have that license anymore. And, I have to be careful, but, I'm not regulated by FINRA and some of those other things. So Todd gives us some great insight, though, and perspective. He kind of balances some of the things. I go out there and I just say what I think, and Todd kind of corrects the direction or smooths out the rough edges that I have. Not that I'm giving you bad advice. It's just a little rough edges in there.
You just sling it, baby, and you say it how it is, and I love it.
We have some fun, right? So, I was so intrigued by our discussion last month, Todd, because, I'm blessed. I get to do this radio program, 4 or 5 days a week, sometimes more. And I get some really, really smart people come on here and talk about things. And by osmosis, some of it sticks in my brain. It's Josh and I get to just sit here and listen, right? And one of the things you talked about last month was this being able to invest in some of these early or high flyers before they go public.
You bet.
And, I learned so much about that. You look, and I went and looked up SpaceX, and I don't see it on any exchange.
No,
and you mentioned that it can be bought.
It can be bought. You just have to source it through a portfolio that has access to it. But historically, institutional money goes and buys private equity inside a company like SpaceX because they can put $5 million in and let it sit for 10 years, and that's usually the minimum. So, the regular retail investors don't have that opportunity to tie up $5 million for 10 years and not expect a return. So it's changed. The game has changed by organizations that have created trusts or a fund, if you will, that allows us to go access that market and maintain some liquidity if we need to get our money back out. So that's what I do is I go out and look for private businesses that are profitable, that are larger than $50 million, that have a track record of at least 10 years of being profitable with a 50% gross margin of profit. So when we're looking for private companies, it's because they're valued on real tax returns, real assets, real distribution. Their value is based on real profit. And those profits are in a reasonable range of 3 to 5 times earnings, not 18 to 21 times earnings. So for me, an investor can make really strong money in a private company that's very profitable with a long track record of 50% profits or higher, and more predictably than you can, say, the stock market in a recessive cycle. I'll give you an example. Taco Bell is one of the strongest franchises in the United States of America. Their revenues have grown year over year at 30% the last 3 years, and they are the top franchise in America for the American diet, which is sad and scary at the same time. But wouldn't it be neat if an investor could actually own 260 Taco Bells in their portfolio, in their IRA, or in their investment portfolio and make 15% EBITDA on their money, which is 15% net profit of those stores, and having the executives that's ran those franchises run that business for them, and they sit back and they watch their private company make money, and they get tax deductions on top of it.
That's pretty interesting. So tell me how do I make money in that? If is the fund growing, or is it distributions that I'm getting, or how does some of that work?
Just like any investment, when you allocate money into it, you become a shareholder or a member of that investment partnership or that investment pool. Therefore, you are owed a fractional share of that profit. If the private equity business is making an average of 15% net profit before depreciation and taxes, the investor gets to participate in those profits in the same way. But these businesses own real estate, they have operating expenses, they have tax laws that benefit them. So it's fun for us to be able to show somebody how to make 5, 6, 7% in cash flow that comes out almost tax-free. And they're getting some other tax deductions along the way as an owner of a business rather than an owner of a stock. So there's a happy balance to be had on public money that's liquid, private money that's not, and then private money that can be liquid that you don't have to hold for 5 to 10 years. And so we really try to help the investor not gamble with all their money just in the stock market. We really like opportunities in that private business space. We really like opportunities in the real estate space in certain areas. And these are because of tax mitigation techniques as well as gross profits that investors want to keep.
So this sounds great. And one of the things that you always think of, okay, if it sounds great, what's the catch? And maybe there isn't any, but and obviously, no one guarantees anything going up or going down. It's just not, we don't do that. But if I'm putting together a balanced portfolio, what kind of a percentage of my holdings would you recommend as a straight percentage idea?
Oh, as a general rule, we keep it depends on the wealth of the investor and the type of assets we're buying, but I generally will not go over a 10% concentration in any one asset for a person's portfolio overall or net worth. And depending on the net worth, that sometimes would be 5%, especially if the investment is not liquid. And we worry about liquidity because that's when people get in trouble when they can't get access to cash in the middle of a cycle that maybe something happens they can't expect. So if it's run a liquid asset, we try to generally rule 5% of your overall. If it's liquid or we have access to redeem it within 24 months, then we'll go out in that neighborhood at 10%. But it really depends on the risk of the investor, the type of tool we're using. But my biggest premise is you don't have to put all your money in the stock market to make money. You can diversify holistically and be built like a pension or institution where they have private businesses, they have public businesses, they have preferred returns and notes and contracts, and they have risk mitigation with things like dual direction protection. But that's how investors win. And a lot of our investors in the last year are positive because we don't hang our hat just in the publicly traded market.
Well, and the thing the biggest point I wanted to get out there, and you're spot on. I love what your philosophy is. Don't try and hit a home run on some of these things. When Todd's talking 5 to 10%, heed his warning, heed his guidance, his intelligence. Right, 5 to 10% means if you lost it all, which it can happen in anything, right? But 5 to 10% is not going to put you out of business if the other things, because generally, if you've ever looked at a scatter diagram from investment houses, and I think was it Morningstar that used to put that out, Todd, is the scattergrams?
Yep, they still do.
So you can actually see that, if private equity was a top category last year, next year it might be a bottom category, but what might have been bottom last year might be top this year. So they change all the time. So you want to have exposure to everything. Not that I'm saying expose yourself. I'm just saying your portfolio needs to have some exposure to everything. And that way you're not going to hit a home run. But the idea here is we don't want you to strike out. Well,
a traditional 60-40 investor right now is not making a lot of money. because of the dynamic of the compression of interest rates, inflation, and fiscal policies the government's ran since 2009. So a traditional investor needs to learn how to be non-traditional in a holistic sense. And unfortunately, a lot of the peers in my industry are well compensated to keep money in the market. And not necessarily well compensated to help people park money outside of the market. And that's where I'm just different. I stand up and I tell the American family, protect yourself, protect your way of life, and have your portfolio be as holistic and in where you locate your money as it is in asset allocation.
Great information. If you want to meet Todd Halterman, give me a call at 800-306-1990, 800-306-1990. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.